Hi everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together. It's generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive in there. Let's take a look, see what people are sharing. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com, where I dive deeper into all of these topics, looking for potential investment opportunities, and sharing that with everyone in the community. We do have a coupon code discount that you can use if you'd like a discount to try it out on a monthly membership or a larger discount on the yearly membership. And you can see that in the description link below. So bar chart, head and shoulders formation for Nvidia. If it breaks the 132 level, it potentially could be good night for Nvidia. And that's your shoulder, your head, and your shoulder, with the red being the neckline at 132. I've been kind of waiting for this rollover to occur in the technology and S&P and the Dow Jones. One of the things that generally causes a rollover is higher interest rates. As interest rates continue to go up, it becomes a major headwind for growth stocks, especially growth stocks with very high valuations. And right now we have very high valuations in the Nasdaq. Nvidia has high valuations. Some people could try to argue that the growth of Nvidia justifies potentially the valuations that it has, and that growth is understated. I am not in that camp. I think that we will eventually get a rollover here, and this could be the beginning of that rollover. I do think that we need a rollover for commodities to really start to get moving. Right now, it seems like everything is getting sucked into the AI and crypto world. So that's kind of what's going on right this second. The value is still in commodities, and it will come. But at this short-term time, it's still sucking in a lot of money. The AI, tech slash crypto sectors. So Giovanni says EU natural gas inventories in percent of full. So EU is at 80.16%. Germany is at 86, Italy is at 86, France is at 72. The Netherlands is at 67%, and Austria is at 84%. Spain is about 90%. So here's the 2017-2021 average, the black line, and the red line's 2024. And we are drawing down more natural gas versus previous years. Now, will it get to a critical level that's way down here? It doesn't look like that's going to be the case, but we are drawing down faster than those other years. Very savage, and let's just read through this because there is some validity to it. This is how the bull shakes off dumb money. Focused on the short term. They lose sight of the big picture and they sell into corrections. He's talking about gold and silver. Smart money sees the big picture. They sell at the top of intermediate rallies. Are we at the top of an intermediate rally right now? No, we're not. Then why in the heck would you sell a winning position into a correction when you know the next intermediate rally is going to take gold to $3,000 or higher? $3,000 gold will be a piece of cake by March, April, and maybe much higher, as this 8-year cycle should give us the final parabolic top. So at some point, metals will need to start accelerating the rally. We've probably only got 2 to 4 years left to go. So anytime now, the metals will start to shift into high gear. But they will only do that after they kick off as many dumb money traders as possible. At every single bottom, whether it is a minor daily cycle low or a larger degree intermediate low, I've tried to keep people focused on the big picture so they can make money and not sell at a bottom. Some listen to me and make money. Many listen to their emotions and lose money needlessly. We're going to get an opportunity to buy or add in a few days. Are you going to be dumb money selling the bottom, or will you be smart money accumulating for the run to $3,000 and beyond? Well, I don't know if I'm dumb or smart in terms of his analogy here. What I've done is I've taken a long-term approach. I've purchased a ton of gold at levels very cheap. Very cheap being $1,200 an ounce, $1,400 an ounce. I bought most of my gold at that price. I bought the majority of my silver in the 14s and 15s and 16s. So I bought when no one was looking, and I've held it for a good long time. I don't view this as something to trade in and out of. And then I've purchased a lot of platinum too. Um, my best purchases were in the 700s, 600s, 700s, 800s. I don't can't remember if I got any in the 600s. There was maybe 1 ounce I got, but they restricted how much you could purchase, which makes me think that the whole system is jacked because I wanted to buy a whole bunch and they restricted people from buying it. Or the retail online retailers were just blocking you from buying it altogether. And then they just put huge premiums right after. So I tried to get as much as I could. And then afterwards, you could get it in the 700s and 800s, but the 600s not so much when it came back down. So I look at things from a longer term perspective. I try not to do this short term stuff. I don't worry about intermediate tops and bottoms and stuff like that. I just take a big picture view of things. Look at that big silver chart with the big cup and handle, and I was buying at the bottom of that cup of that handle as best as I could, and then I just loaded up. You could have purchased American Eagles for under no for about $16 an ounce when it was down in the 14s, and they were running specials on American Eagles, a buck 50 over spot every once in a while, and then I'd buy a whole bunch because the premiums were really low and the price was low. The same thing occurs in real estate when everybody is negative and the economy pulls back. You get cheaper house prices and you generally get cheaper interest rates. So the affordability goes up, like threefold because you can now negotiate on the home and get a cheap price and you can finance it with really cheap money. So buying these things at ideal locations when no one is really looking is the way to do it. The problem is people are not set up emotionally to do that. Right now, I think a lot of oil stuff looks good. We are cheap in relationship to gold and silver and all these other commodities. It has a falling wedge, but people don't want to buy it when no one else wants to buy it. They want to go chase price. And that's what he talks about dumb money. They're just focused on the short term. They lose sight of the big picture. And I make the majority of my money using the big picture. And then I just sit and wait, and I'm more patient than others. The patience is what I think the grinding sideways or slightly lower is what kills most people. And then what really throws it over the top is if people see other asset classes going up and their asset class is not going up, that kills them. That is really hard for them to stay put in the better risk reward sector than the one that's got really crappy risk reward, but it's going up a lot in the short term. So when I look at this, Jacob King breaking, Bartcoin's market cap has now surged to 643 million, making it larger than 85% of US public traded companies. Think about that for a second, guys. Bartcoin, which, I mean, this just seems stupid to me, is 85% larger than than the US publicly traded companies out there. It would be in the top 15% of market cap. That's crazy to me. And I just pulled up Fartcoin. Look at this thing go, man. I mean, this thing is just ripping. Now, this is where people struggle. They want to chase into this because, oh, people are making money and I am not. That's dumb money chasing things, in my opinion. This also is an indicator of where we're at in the cycle. Generally, when these, we'll call it meme coins or these small cap coins, do stuff like this is when you know that you're more than likely getting closer to a top. Now, could this continue to go up? Could things stay irrational longer than what I think? Sure, sure could. Rock bottom entries. Oil is signaling a massive rally on the horizon. Inflation is surging higher as the Fed eases and debt spirals higher. Commodities are the place to be, in his opinion. We've got multi-year support here, and we do have a bullish engulfing candlestick on the weekly. This is a monthly here, on the monthly here. Bullish going up. We also have potentially a breaking of the relative strength indicator to the upside here soon. We'll see if we get follow through with that. Moving down to Josh Young, even the IEA is showing global oil inventory declines. So this is global observed oil inventories drew by about 39 million barrels in October, led by an exceptionally sharp decline in oil products, minus 82 million barrels, as low refinery activity coincided with a rise in global oil demand. Now, here's the weird part. We have our low inventory levels. They're indicating that we're about $15 underpriced. And then we're actually getting drawdowns. It's not like we are coming from a low level and adding to it. We're coming from a low level and still drawing down, which makes me really confused on why the price is still down where it is today. Energy headlines. So, U.S. efforts to restrict Iranian oil flows are beginning to yield notable impacts, says Kepler. And this is tankers involved in Iranian crude oil shipments 2024 by current routes count. And then idled is what we're looking at here. Gira Soloway says the stock market achieves something it has not done since 2001. 9 straight days of more stocks dropping than going up. It's negative breadth. All while the Nasdaq made a new all-time high yesterday, which is food for thought. And that's generally what you see during topping patterns, aka since 2001. And you know what happened after 2001? We had a slowdown in 01. We had lowering interest rates, lowering dollar, and a big commodity bull market. And I think we're in the same location as that location there. Patrick Karam says there's absolutely zero cares in the world right now for the Nvidia chart. None. And we've got a 2-year-old rising support line that's breaking to the downside. And here's your zoomed in thing breaking down. So could this be a potential top with a shoulder head shoulder too? It very well could be. And this is good for commodities because I think we have to start breaking down in the technology sector and AI and some of these other sectors and get some money flows over into commodities. Kim Benny says Iranian net exports are starting to fade. You can see it's way down there for Iranian exports, the dark blue. Ted Cross says, have operators exhausted inventory in the Bakken, which is a shale play? The play still produces 1.8 million barrels of oil equivalent per day, though many are wondering what its future holds. We have put together our most detailed inventory study yet. Let's dive in. On the left, so I'm not going to read through all this, but we can look at the chart here. Inventory exhaustion in the Bakken. Operators are turning tier 2 and tier 3 rock to maintain production after the core is almost exhausted. And here we are, drop, 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 drop. And you can see tier 1, which is the dark green, shrinking. You can see they're going to tier 3, tier 4 to hold this production up, however they can hold it up. But 2023, higher portion of tier 2 versus tier 1, and it's dropping. So we've got production dropping here. So Peter Schiff says, today's hotter than expected inflation data following similar news yesterday is putting more downward pressure on gold. But gold will soar when investors realize the Fed will keep cutting rates despite inflation. and return to quantitative easing, sending both inflation and gold much higher in his opinion. Break wave, we had dry bulk up, which is good. Capesize and Panamax up 2-3%, and then tankers were flat. Grady with a good chart here. Uranium miners did 580% in its baby bull move. Above black line, though, the real fireworks start, and we're up against resistance at black line here. So again, be patient here, guys. I know we've got some selling pressure here recently in some of the uranium companies, but everything looks okay from a technical perspective. Volume, thin zone all the way up means no historical volume resistance. Going back up, it's going to fly when we go back up and break through this resistance here. There's not a lot of resistance, what he's saying. Christine Guerrero says the most recent EIA Gov STIO is noteworthy. 2025 U.S. oil production is expected to be flat from whatever 2024 exists at along with the Permian. Many believe that the weekly reports are overstating today's supply, which makes for some interesting monthly reports in the quarters ahead. So crude oil production by region and the forecast is basically moving sideways. We'll see what happens. Some people are stating that we could see shortages from 2025 onward. Randy says some analysts are bashing gold silver miners here while saying metals is the only way to go. That is wrong. And it shows they do not understand the miners or big picture charting. Miners have a huge blue backtest in the making. That is why they are not reacting to metals every move here. And what happened after the previous blue big picture backtest? Yes, exactly. Playing miners is all about timing as with metals. So this is what we've got. We've got a back test here in 2020, 2019. Breakout, back test, and then boom, big move higher. Right now, we've got a pretty low entry point in early 2024. We took advantage of that too on the website. Breakout, retest, and then we hopefully can start moving back up again. Big move. Tavi, agricultural commodities have surged nearly 30% year over year, reaching their highest levels in a decade. Meanwhile, the Fed is preparing for another rate cut next week. Inflation is far from over, in my view. I'm wondering if the long end of the curve will continue to go up. The short end is what they'll cut. That's interesting. But yeah, agriculture commodities keep ripping. And that's what I've got for today, guys. So that's where I'm going to end it. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Discount is the discount coupon code for the website. We've got a question and answer session at 5 p.m. Sunday. Like to join or get onto that call. So we'll catch you next time. This is Finding Value.